The way that this table works is these are all hypothetical 10-year term catalogs. So each one of these cells represents a hypothetical catalog that could come onto the platform. So for instance, this one I have highlighted has a dollar age of 4.2 years and a last 12 months earnings of 11,000. So if that catalog came onto our marketplace, the owner would see a offer for 3.6 times, which is the highest multiple that matched to the catalog. Again, this is back in June, so this is what the table looked like back in June. And what we've noticed then was there's this big gap where there was absolutely no orders that were matching to catalogs between 3 and 4 years old with LTMs over $7,000. So someone could come in with a catalog and not see an offer even though they were eligible, and it might be a great asset. So that was definitely something we wanted to fill. And then looking at the rest of the table, there's only a few separate orders that are actually getting matched. So there's this 3.25 times, 3.6, 4.05. There's this 5 times order that comes in at 6 years of dollar age, but only up to $4,000 of LTM. And then there's this small little band of a 4.21 times. So there's only about 5 or 6 actual orders that are being matched to these. So our goal was to, first of all, fill this big gap here so people are actually seeing offers when they can see offers. And then also create more competition in the marketplace and hopefully drive up some of those multiples so people are more likely to accept offers that they see on the platform. So that's what it looked like back in June. Here's where we are today. And as you can see, there's obviously no gap here, so that's been filled in, which is great. And there's also a lot more competition kind of across the table. So there's this pretty large 5 times multiple that starts right at 3 years of dollar age, but of course it only goes up to $2,000 for LTM. So obviously not looking to take a lot of risk in a total investment value there, but trying to capture as many orders as possible. And then a larger 6.2 times comes in here at 4.1 years, which kind of extends all the way up as far as we go. So a lot more competition here. We have this 5 times, it goes up to 4, 3.4 filling in that big gap that we had, 3.6 times here. And there's a lot more competition kind of across the table. Another a way of looking at this is great with hypothetical catalogs, but a big question that at least I had looking at this was, where are the actual catalogs that are coming into the platform? Where are they fitting in here? So what we did is overlaid a scatter plot of all the catalogs that have come in to our system. So the blue dots represent secondary market assets and yellow dots represent primary market assets. So each one of those is an actual catalog that came on to the platform, is eligible for offers, and we're showing here what offer it would have seen at the time, or back in let's see, so yeah, June or end of October. So you can see these yellow dots here, younger catalogs, they'd see one of the 5 times multiples. These catalogs here would show a 3.4 times multiple. And it's kind of interesting to see the distribution of catalogs across the range. Obviously there's more of a crush down here with the lower earners. There's a few obviously that are down in the $17,000, $18,000, $19,000, $20,000 range, which is great. There's still a lot of opportunity out there and real catalogs that are seeing real offers. And now a lot of these have been bumped up to much more competitive levels. And yeah, I'll just actually zoom out a little bit so it's easier to see this scatter plot and where the density of catalogs actually lies. All right, I think that's good. So yeah, up to a lot of catalogs that are a little bit younger down here, and then there's this band between $1,000 and $10,000 where most of them seem to lie. But then there's also a lot of opportunity with the larger catalogs down here. There seems to be this kind of a strange cluster around 6 years of dollar age there. And even all the way up to 10, 11, 12, 13, there's a lot of older catalogs also that will be seeing a lot of offers. Okay, last thing to look at for the 10-year terms is what we kind of called the disparity table. So basically just taking what we would recommend in our analyst benchmark price for each catalog and then comparing that to the actual offer that is getting made to catalog owners, and then showing that as a percentage of the difference between that. So the green zones are where we think there's more opportunity for competition to drive those multiples up a little bit higher. Red zones are where you should probably stray away from because we believe those multiples are probably overpricing the assets just based on the dollar age and the multiples that we've seen them transact at in the past. So yeah, there's obviously a big opportunity here, really between 3.8 and 4.6. So someone can come in and set a a decent multiple, maybe at 4.2, and capture a large swath of catalogs. And if we jump back to the scatter plot, we'll see that there are a decent amount of catalogs there that would see offers and see that they have an increased offer and perhaps accept it. So yeah, this is that's kind of the basic overview of how to use these charts. I think we'll be sharing a read-only link of these so you can scroll through them and check them out for yourselves. But other than that, thanks for watching this far in the video, and I hope it was very helpful for you.